I'm selling.
Welcome to Dumb Mistakes Investors Make, our new series where we analyze stock market clips from your favorite movies and TV shows that you can learn from the strikeouts and stupidity of screen sensations. I'm your Uncle Paul, and I've been a value investor for over 10 years. Seinfeld is, quite simply, one of the greatest shows of all time in my opinion. Despite the show being about nothing, you can actually learn quite a bit from it. Now you're probably wondering, Uncle Paul, how can I possibly learn from the show Seinfeld? But in season 1, episode 5, George caught wind of a can't-miss stock from his buddy Wilkinson, and he convinced Jerry to get in on the investment. And boy, did they mess up. In this video, I'm going to react to this particular Seinfeld episode, ultimately uncovering 5 key mistakes that Jerry and George made in their adventure in the stock market. So sit back and enjoy the process of learning from a show that's supposed to be about nothing.
I know, it's down again.
By the way, isn't it weird that you got stock prices in the newspaper? Back in the day, when I was in high school, I actually had to call the Akron Beacon Journal hotline in the middle of the day from the payphone in the school cafeteria to find out my stock quotes. Or I had to wait till I got home and check the paper for the previous day's stock quotes.
Up again. This is incredible. I'm getting it.
You getting what?
A stock.
What stock?
Did you ever meet my friend Simons?
Maybe.
He knows this guy Wilkinson. He made a fortune in the stock market. Now he's got some new thing. You know, it's supposed to be a big merger. He wasn't even supposed to say anything.
Okay, guys, mistake number 1. They saw the price going up and they thought they were missing out. Even though this was from the 90s, FOMO, which is the fear of missing out, existed even back then. It has existed since the start of time. Feeling like you're missing out on Tesla, Bitcoin is no different than this.
You guys should think about doing this, too.
How high is it supposed to go?
I don't know, but Simon said that if I wanted to get involved, that Wilkinson would tell me the exact right minute to sell.
And just like that, we have mistake number 2. No one, and I mean not a single person in this world, knows the exact right moment to sell a stock. This guy Wilkinson is no different than your brother-in-law's financial guy who claims to know all the ins and outs of the stock market. The truth is, he doesn't know crap. Trust me, if Warren Buffett can't time the market, Wilkinson and no one else in the world has any chance of it. And by the way, another big point, it's just not different this time. There have been countless life-changing inventions in the past 100 years, from better airplanes, to better cars, to TVs, to radios, to the internet, electric vehicles, the dawn of artificial intelligence. The list goes on. Even though these inventions have all changed the way in which we live, it does not mean that every company that enters them, especially early on, is going to succeed. Now imagine if Jerry and George were investing during the dot-com bubble. Unless you picked the specific handful of companies like Microsoft, Apple, and Amazon that actually ended up making it, they would have lost a vast majority of their money. In fact, even if they picked those 3 along with the others, they still would have trailed the market since the dot-com peaked. And you've seen where Apple, Microsoft, and Amazon have gone since then.
Jerry, the stock is the same as when you checked it earlier. There are no changes after the market closes. The stock is still down.
I know, but this is a different paper. I thought maybe they have different sources. That's 4.5 points in 3 days. That's almost half my money.
Okay, now here's mistake number 3. Looking at the stock price every minute of every day. True value investing is all about having a long-term outlook and buying a company with a well-thought-out process, taking in factors like their cash flow, their profit, their revenue growth, and their debt. To be honest, you shouldn't even care about the day-to-day stock price. Once a year, maybe, and even then, your analysis should be on the company. Are the fundamentals the same? Are the fundamentals that you made your buy decision on still the same? Even if they've changed, is your price today still representative of a good value for the company based on the fundamentals that you see? That is all that should matter to you. Now, if you're a day trader, you have to look at stock prices daily. But day trading and investing are very different things. What separates day trading from this scene is that a good day trader also has a process. Jerry and George never had one. They just dump money in and pray that it goes up in price. No process, no dice. So let's see what happened here.
Hey, I told you.
Yeah, you told me.
It's all manipulated with junk bonds. You can't win.
Mistake number 4, trusting someone because they sound smart. Listen to what Cramer just said about everything is manipulated by junk bonds. I just have one question. What the hell does that even mean? It's all garbage. But if a layperson heard Cramer saying that, they'd probably think, wow, that's a smart guy. He mentioned junk bonds. He said manipulation. He used big words to make it sound like he knew what he was talking about. When I was in college, I worked at a restaurant, and one of the managers there was a guy named Kirk. This guy was a big-time gambler. Remember one day on the TV, there was CNBC on, and Kmart popped up. And Kmart was a local company in that area. And he said he owned Kmart stock, and it was easily going to triple. And I remember thinking to myself, man, this guy must know something I don't know. I wish Paul of today could go back there and just laugh at the guy and say, you have no idea what you're talking about. Well, we all know what happened with Kmart from there. It was bankrupt within a few years. I promise you, your friend, your friend's friend, everyone, they don't know shit about anything. And when it shows, they'll always have an excuse for why they're down. It's the junk bonds. It's Elon Musk. It's not. Anytime you hear someone justify a stock loss with a fancy word, run for the hills. What matters is keeping it simple and following a simple process. Now look at how Jerry and George are reacting. You're going to be emotional when you have no idea what you're getting into and your losses are going to be big. Or if your losses aren't big, you're going to sell too early and you won't make up on the gains. That's the big key. So let's see what happened to Jerry.
Well, that's it. Look, I'm going to Vermont. I don't want to think about this. I'm selling.
I'm keeping it. I'm going down with the ship.
So Jerry sells a stock while George holds on. Keep in mind though, George held on just because he probably figured he had nothing to lose being down 60%. Now I think we need to watch the end of the episode before revealing our fifth and final dumb mistake that investors make. So check this out.
6 points? It's up 6 points.
Told you not to sell.
You did not tell me not to sell.
I said the market fluctuates, remember?
Look, Vanessa, of course the market fluctuates. Everybody knows that. I just got fluctuated out of $4,000. So, Big Daddy, I'm just curious, how much did you clear on your little transaction there, all told?
I don't like to discuss figures.
How much?
I don't know, 8,000. It's a Hyundai. Get out.
And there you have it. Dumb mistake number 5. Jerry sold the stock, he panicked, thought the stock would never go up again, and missed out on all the gains that George got. Now, does that make George a genius? Well, I want to add this. George really got lucky profiting from a stock that he bought and hoped would go up. It's funny that he's already got another new stock from Wilkinson for Jerry and Elaine to go in on him with. The thing is, he could really struggle in life if he keeps this up. Yeah, he got lucky the first time, but there's very little likelihood that he scores another one like this ever again. And that cocky and arrogant little smile is what worries me. And it reminds me of all these investors who pick something randomly, it goes up, and it makes them feel like a genius. Just because a stock goes up doesn't make your process correct, and just because a stock goes down doesn't make your process wrong. So anyways, thank you very much for watching this video, and I hope that you'll remember this the next time you think about buying a stock. If you want to learn how to buy stocks the right way with a good process, please check out our Stock Market Investing for Beginners series to get you started off on the right foot. I'm your Uncle Paul. Have a great day.